Good evening. Welcome to AI Capital Brief. Tonight, SpaceX, the private rocket and satellite company that has reimagined spaceflight, and why it's suddenly at the center of Wall Street's attention. From Starship and Starlink to NASA contracts and a potential mega IPO, we break down what happened in the fourth quarter of 2025 and what investors should watch next. Let's start with the headline. Multiple outlets now report that SpaceX is preparing for a public offering targeted for 2026, a deal that could seek to raise well over $25 billion and potentially peg the company's valuation in the trillion-dollar range. Those reports say bank talks are already underway and that the IPO could be among the largest in history if it moves forward. This is still unconfirmed by an official S-1 filing, but the leaks have sent shockwaves through markets. Why would SpaceX go public now? The answer is Starlink. The satellite broadband business is driving the company's top-line growth and has been rapidly scaling subscriber counts and commercial contracts. Recent reporting cites revenue projections of roughly $15 billion for 2025, climbing to approximately $22 to $24 billion in 2026. Figures largely attributed to Starlink's growth across consumer, aviation, maritime, and enterprise customers. Those revenue expectations are a major part of the valuation math driving the IPO chatter. So what does SpaceX actually do? Think of three core divisions. 1. Launch and rockets. SpaceX designs, builds, and flies rockets. Now with a focus on Starship, the heavy-lift vehicle intended for rapid, large payload launches. Reusability has driven down costs and enabled higher launch cadence, which in turn supports mass deployment of satellites for Starlink. SpaceX remains the most active commercial launch provider in the world. Second, Starlink, the consumer and enterprise broadband service delivered by SpaceX's vast low Earth orbit constellation. Starlink is diversified into consumer home internet, maritime and aviation connectivity, and recently, direct-to-cell services in partnership with major telcos. Third, government and human spaceflight. SpaceX holds contracts for government missions, including crewed and cargo flights for NASA and military and intelligence work for the U.S. Department of Defense. Its Starship program was originally selected by NASA for a crewed lunar lander role under Artemis, though NASA has signaled it may reopen aspects of that competition given schedule concerns. On contracts, SpaceX's relationship with NASA is one of the company's crown jewels. SpaceX has been the prime contractor for the Starship human landing system and continues to receive contract modifications to support Artemis objectives, though recent reporting shows NASA is also pressuring timelines and exploring rival bids because of schedule slippage. Meanwhile, Starlink has been used by the Pentagon in operational settings and has been awarded multiple defense-related contracts and tasking, underscoring its importance for military connectivity. Another big development, Starlink's direct-to-cell ambitions. SpaceX struck a high-profile partnership to deliver satellite-to-phone connectivity with T-Mobile, a move that could dramatically expand Starlink's addressable market by enabling standard smartphones to receive signals directly from satellites. Regulators, including the FCC, have already cleared aspects of the plan, and major telcos around the world are listed as direct-to-cell collaborators. That business line is a wild card for future revenue upside. Revenue breakdown. While launch revenue remains meaningful, Starlink is now the revenue engine. Analysts and independent estimates show accelerating subscriber growth. Consumer subscriptions, aviation installations, and enterprise maritime deals, and new verticals like direct-to-cell and space-enabled services could lift margins materially if scale and pricing play out as forecast. Still, profitability will depend on hardware costs, launch cadence, regulatory approvals, and competition in the satellite broadband space. Risks to watch. First, timing and valuation. The reported $1 trillion plus valuation rests on optimistic growth scenarios and potential speculative projects like space-based data centers. Second, execution, Starship delays, or NASA contract disruptions could dent investor confidence. Third, regulatory and national security reviews tied to spectrum and international operations could complicate market entry in some countries. What's next? The clearest signal will be an S-1 filing on the SEC's EDGAR system. Until then, expect more leaks, potential secondary share placements, and intense coverage as banks line up and as SpaceX attempts to frame the narrative for the public markets. Bottom line, SpaceX has moved from a pioneering rocket startup to a diversified space infrastructure company with a consumer-facing cash machine in Starlink. If the IPO proceeds at the scale currently reported, it would reshape both the aerospace and tech indices. But it's a story that depends on execution, regulation, and whether investors buy the long-term vision. Stay with us as we track filings, revenue updates, and any formal announcements from SpaceX. Thank you for joining us on AI Capital Brief. If you enjoyed this breakdown, hit like, subscribe, and stay tuned. We're just getting started. I'll see you in the next video.